Your lender will happily explain refinancing to you because they make money on it. What they won't casually mention is a move called recasting, which is basically the financial equivalent of asking your gym for a partial refund because you only used half the treadmill. It's real, it's legal, and it can knock hundreds off your mortgage payment. Let's get into it. Refinancing gets all the headlines, but honestly, right now it's a bad deal for most people. Rates haven't dropped enough to make the paperwork, the credit pull, and the closing costs worth it. Recasting is the quieter option nobody talks about. Same loan, same interest rate, same term. The math just gets redone in your favor. Here's the mechanic, and it's genuinely this simple. You hand your lender a lump sum, a bonus, an inheritance, that one stock that finally did something, and they apply it directly to your loan balance. Then they recalculate your monthly payment based on the new, smaller balance. Nothing else changes. Not your rate, not your term, not your credit score. Just a smaller number due on the first of the month. For the cost of a recast fee, usually somewhere between $150 and $500, so basically a nice dinner out, you get a permanently lower payment. That's a better return than most of us get on our actual investments. Now, quick disclaimer before you call your lender all excited. FHA, VA, and USDA loans usually don't qualify for this. If that's you, I'm sorry, this video's a bit of a tease. But stick around because I've got other moves for government-backed loans too. And if you like finding the stuff lenders don't advertise, subscribe. That's basically the whole channel. So, who actually gets to do this? Conventional loans, the ones most people have, generally qualify. Government-backed loans, as I just ruined for some of you, typically don't. Most lenders also want a minimum lump sum, usually somewhere in the $5,000 to $10,000 range, before they'll bother recalculating anything. And to be clear, you keep your original rate. So if you locked in something good a few years back, this is one of the only ways to lower your payment without giving that rate up. If you want to actually do this, here's the process, and it's refreshingly unglamorous. First, call your loan servicer and ask specifically for a loan recast, not a refinance. Different department, different conversation. Second, ask for the minimum lump sum required and the recast fee. Get both numbers before you commit to anything. Third, make the payment, earmarked specifically for principal reduction. This part matters. Don't let it get applied as a regular extra payment. Fourth, wait for your new amortization schedule. Your lower payment usually kicks in the next billing cycle. That's it. No inspection, no appraisal, no sitting through an hour-long call justifying your existence to an underwriter. This is smart if you like your current rate and you want lower monthly cash flow without restarting the loan clock. It's not smart if you'd rather put that lump sum somewhere with a better return. The market, a retirement account, whatever your actual financial plan says. And one myth to kill right now, recasting doesn't shorten your loan term. If you want to pay it off faster, that's a different move. Just making extra principal payments without recasting does that instead. So, extra cash sitting around and a mortgage rate you don't want to lose? This is the move your lender isn't going to volunteer because there's nothing in it for them. One phone call, a few $100s in fees, and your payment drops for the rest of the loan. If this saved you a headache or just some money, hit subscribe. I dig up stuff like this every week.